Hey guys, good morning. My name is Ruben Johnson. So we're gonna do a market overview, but first I'm gonna cover NIO because I know a lot of people wanted to go over NIO specifically on my video yesterday, and it was primarily the interest. So I will do that, and then from that point on, I will go over the overall markets. On Friday of last week, I went over my first trade on Instagram and on YouTube, and I talked about NIO. Since then, the options, those particular options, are up. They've almost doubled in price in just a couple of days. So nothing says a buy, sell, or hold recommendation. You can lose all of your money trading and investing in the financial markets. And so with that being said, we're going to go ahead. You obviously use your own discretion, and this is for entertainment purposes only. So with that being said, we can kind of look here at the way it is. It obviously gapped up with a lot of the overall market. Something that I particularly like about NIO is that as the market was falling the last couple of days prior to the rally, is that actually NIO held its place. So that tells me two things. I'm following the order of the so I'm looking at obviously supply and demand orders, right? So with NIO holding its spot, it was clear that two things were happening. Either we were baselining on where there was enough order flow or demand that it prevented the price from falling, or that buyers were coming in. So either way, it seemed they had hit the floor. So obviously, as it gapped up, you can usually expect things to gap up to close the overnight gaps and kind of go from there. So if we're going to go over here and look at so the last time price was here. So I'm going to go ahead and draw a line. And so the reason I'm drawing a line is because I want to go back to the last time the price was here, even though it was a gap up again, because I want to find where the imbalance of buy and sell orders are, if there are any overnight orders. I presume the market will continue to remain very, very volatile. And the reason I say that is because I feel as though the major players and institutions want to see where the orders are, generally speaking, without their involvement. That's generally the vibe I get from them. That's why I was able to kind of predict that the market would, on Friday's close, would be able to have a significant pullback on Sunday and then rally up on Monday, because I feel as though the lows are just really being tested. And so I'm going to go ahead and show that. So I'm going to go here to the daily time frame. And so obviously this is Thinkorswim. I hope you guys can see it better. And I am going to move this to the hand cursor. That way I can kind of... And so the last time price was here. So then I'm going to dissect what happened within this candle, the last area of supply. And what I'm trying to figure out now is where I would want to take target, even though my options essentially initially they were out of the money, then they went in the money. So I'm going to cut down now to the weekly. I just wanted to see an overall picture. So I'm going to cut down to the daily now. Actually, I might just need to open up this entire chart. So here we're going to look at the last time price was here. And so it looks like the price, even with the overnight, it looks like it tested all the way up here. So then I'm going to go ahead and cut it again. And actually, guys, so I'm going to go on demand, so I can actually go back in time and I can dissect the last time that it was here. So I'm going to go on demand. Okay. And then we're going to go back in time to when this happened. So we're going to go to March. Let's go to April of 2019. So, right, perfect. So here we are looking at the price action. And if you have two screens, I would consider going on demand in one screen, or having a broker that can let you dissect the time frames a little better. So interactive brokers can do this if you have the real estate on the screen. But we're going to basically dissect and look at, and here, so we can kind of see that it rallied. And then so it's kind of why I said a while back that my target might be something around $12. So I'm going to cut it down again to, so here we're on the 1 hour. And so we can see that price fell pretty aggressively here. So then here we are looking at the last time NIO was around this price, and we're cutting down to the 1 hour time frame because we want to find the pattern formations of what happened when it got here. So this is actually the current price of what it tested on the overnight. Was the overnight high was like 742, 761 some. So let's look at that. So this is around what the overnight high was. And so you can kind of see that it tested the supply area. And so then the most important thing to see will be whether it penetrated it. So we can cut to an even smaller time frame and see whether or not this was penetrated. And you can use the wicks to begin to kind of figure this out. As you guys know, the price action are like a photo negative. The wicks, the candlesticks are everything you don't want to see, and the wicks are the last time that buyers came in, and then but it didn't quite open or close there, and that's why. So I like to see them because I like to see where the buyers were interested that pushed the price up, or inversely that pushed the price down. So then we can kind of see here that a target we could consider, as it seems like the next area of sell orders would be right around here at 780. And so then we can kind of see that this might be an area of 780 to 812 where we would consider unloading it, depending on the velocity in which it arrived to that place and depending on the pattern formation that it arrived there. So as you guys know, I got those options at around 27 cents on average. I got some of the lows at 15 cents, and I guess I was buying in as it was coming down to the current price. I started to do this series after I got into the trade, obviously. And so we're looking here at, so now that we know kind of where supply is that pertains to NIO, then there's a couple of things we can do, right? We can buy it outright. We can buy the stock outright. We can kind of consider looking at a couple of call options or out of the money options. And again, I like out of the money options because it can protect you from the overnight risk. And meaning that if you buy a call for 20 cents and then it goes to zero tomorrow, the most you're going to lose is what you paid for that call at 20 cents, etc. And I like to go at least 3 months out because I find it's important to be able to get out of the trade because you can always cash it out early, and it's better that way. Obviously, you can get assigned before then, but then the risk converts to you being assigned and then falling to zero overnight. So then it does change the risk profile from that standpoint. And so with that, considering the current market conditions and everything going on, then because I would consider unloading even more so at around that price. But then if it clears that, I can presume that it could go to, so this is all $8. So then I would say that I would be looking for it to clear at 880 if I was going to look at some out of the money calls, and then hold it to around $10 or so, $10.50. And so I might look at considering what a better risk reward profile might be, to buy them outright, to buy an in the money call options or what have you, or whether I would hold it to the breakout essentially and then take target at the higher level. So going out at least 120 days. So with that being said, we're going to go back to live, and we are going to go, like I said, 3 months out. And so we can see that the $10 call would be 85 cents. And so the risk reward profile is not really there, considering that would be above our target. The $6 call, actually, that might be one of the best bets, considering it has an intrinsic value of $1 and 26 cents, meaning that you're only really paying 70 cents to control it. So then if you're weighing whether you're going to buy it outright at $6 or whether you're going to pay 70 cents to hold it to a possible target of $10, you can do that. However, in this situation, from what I'm seeing, you can also, again, if you're expecting or if you're hoping for assignment, you can also look at closer in time. So even like weekly, and again, and that one's pretty eye to eye with the current price. It has about 4 cents of extrinsic, but then again, you will be assigned. So looking at the 83 cents here, I don't like it. So I would say if you're trying to hold it, I would consider maybe doing the $6, because here you're essentially paying 70 cents at the break-even price of pairing it against the break-even price of 724 in this very moment. The $7 call has a 25 cents intrinsic value, so then your extrinsic value, or you're paying $1.25 for the option. Again, here it looks to be that one of the best risk profiles in my opinion would be getting the $6 call because of the intrinsic versus extrinsic value. It makes the most sense. And of course you can go deeper, but then at this point you would consider, if you're in America, whether going deeper that way would make sense for your for the leverage, right? Because the benefit of options is the leverage you can use. If you're going to, you have to think, if you have a 4-to-1 leverage in a US account because you have over 25K, then it might not make that much more sense to buy an option where you have all of that extrinsic value. And so versus buying it outright, because of the way 2-to-1 or 3-to-1 leverage works, at that point you might as well buy it outright, or buy it outright, let's say at 725, and then maybe getting a call at $6, but then your break-even price. Again, this, I like NIO because the way they're priced is not super inflated, and you can kind of mold it to how you prefer to take on this risk, and in that sense, you can have a little bit more malleability in terms of the way you want to address your risk reward from that sense. And so right now we're at the lower supply area of the current price. So we're going to come back in to the current price. I was waiting for a possible breakout here, and I'm gonna make this one like an orange because I could consider taking profit depending on arrival, or I could consider buying the breakout at that time. And I will do the same here. And so with that, let's look at the overall market.